So you want to learn how to pay less taxes and keep more of your hard-earned money for yourself, then this is the video for you. So in this video, I spoke to the head of the South African Institute of Professional Accountants. She gave us some tips on how we can leverage the current financial system, our current taxation system, to legally pay less taxes. So Kantha spoke at Financial Success Summit, and this is the annual online personal finance conference that I host every year. And she spoke at all of them so far. There's only been 2 in 2023. You can look forward to the next one. But she gave us some tips. Happened in 2021. All of them are still valid. There might be slight variations, but for the most up-to-date allocations of those various thresholds in terms of your tax, reducing your tax liability, click the link where you're watching this video, and I took down all the notes for you. I have it in a nice little checklist, and you can download it. So remember that this video or any other content that I put out is not financial advice. Neither is this tax advice. How you need to ideally maximize this video is, one, you should be taking notes or download the notes I have taken and take this to your financial advisor. If you don't have a financial advisor, book an appointment. Click the link where you're watching this video and we can chat one-on-one. Also take it to your tax accountant and ask them, does this apply to me? How can I maximize this? How can I utilize this aspect in order to reduce my tax liability? But if this retirement things interest you, I want you to join me in Sandton on the 19th of November, 2022. All right, I'm hosting Retirement Bootcamp, where I will be teaching you all about how you can retire sweetly in South Africa, how you can thoroughly understand the South African retirement landscape, how retirement annuity or pension product is not a retirement solution. Okay, those are just products. You got to apply strategy to that. And I'm going to be teaching you strategy on the 19th of November. So click the link and get yourself tickets before they're sold out. So I'm going to do a hybrid presentation with Kantha, where she has left off. I will fill in from a financial advisor's perspective. So let's jump into that chat with Kantha. So here we are with Kantha Naika. She is a professional accountant and she is the chairperson of the South African Institute of Professional Accountants as well. And she's going to be sharing with us how to legally pay less taxes.
Great. Thanks, Yolanda, and welcome to everybody. There are a few things that you need to know as a taxpayer, and I was reminded when this video for this particular session flighted, I was reminded by a colleague that we must talk about tax planning and reducing tax and the old avoiding tax and evading tax and all of those sort of phrases should be thrown out the window. So this is about tax planning. So understanding that you are in control of how your taxes are planned, because you should understand how you earn and therefore how you should be paying tax. I'm going to follow on from what was said by the previous speaker. And if you listen to her session, she spoke about income from properties. And the reality is that the income from properties is taxed. If you're not very clever about how you show the income and expenses, you end up paying tax on those investments. So we'll park that aside for now, but let's just talk about all the other things that we have in our suite of armor. So I'm obviously talking to people who are taxpayers. You are making sure that you have your you've got a tax number, you're registered with SARS, you submit via SARS e-filing. So what happens on a monthly basis? You need to be paying tax PAYE of your salary. That gets deducted by your employer. Your employer needs to make sure that you're registered, he's registered to deduct that, he or she's registered to deduct that tax from you. But you need to make sure that you are a taxpayer in your own right. That is your responsibility. So registering as a taxpayer is your responsibility. All individuals are responsible for their own taxes. When you look at how you earn your money, so do you earn salary? Are you a business owner? Are you taking drawings? Are you earning money from investments? Are you a retired person? Are you just a student? There are different ways in which you can plan around how that the tax, or how to lower your tax on those types of incomes. But I've picked out about 10 different ways that you can look at personally, and it may not all of it may not be necessarily true for you. Some of it may be true because it depends where you are in your life and how far you've gone on your tax journey and your investment journey and how much planning you've done thus far. So the first thing, and I'm sure Yolanda will as a financial advisor, applaud this one, it's contributing towards a retirement fund. The reality is the retirement fund contribution gives you a deduction monthly. Some people choose to do this out of their tax monthly. Some people choose to do this at the end of the year. Whenever you choose to do it, it has the measure of, it has the effect of reducing tax. So our take on it as accountants, and we do this in our own practice, as soon as you start working for us, if you're 21 years of age, it doesn't really matter how old you are. You should take advantage of the retirement annuity benefit that the tax laws afford you, and you can work out what the your financial advisor can work out what the optimal amount is. Your tax advisor can work out what the optimal amount is because it's a percentage, and obviously based on other factors as to when you're going to retire and that sort of thing. Then and RAs obviously can last until you 55 years of age, or sometimes longer. It just depends, but 55 is sort of the rule of thumb. Are there any questions at this stage?
So here's a lowdown about retirement annuities from a financial advisor's perspective. So as a rule, every South African is allowed to contribute 27.5% of their annual income into a retirement annuity. And in South Africa, we basically have 3 official retirement savings pots, which is your pension and your provident. The rules changed on that, and we did a video on it. Check out retirement playlist on YouTube. The pension, the provident, those are both employer-sponsored retirement savings. So what happens there is either you make all of the contribution. Many times, especially in bigger companies, the company makes a contribution on your behalf. You make a contribution on your behalf. It's very important to know that the employee's contribution is taxed as a fringe benefit. All right. A lot of the tax concessions that we had are slowly being retracted by government. So that portion is taxed. Your contribution is not taxed. You also have the retirement annuity, which is like a private pension fund. So if you don't have a pension or provident, it's essential that you have your own retirement annuity as your own personal pension plan. You can also supplement your current pension or provident plan with a retirement. Like I said, the contributions to these retirement funds are capped at 27.5% per annum. And there's also another cap of 350,000. So you can't exceed that. Usually a rollover happens, and then at age 65, hopefully it balances out in the years that you haven't contributed your 25.5%. If you're looking to build generational wealth, this is a great way to do it, because remember, with pension products, any growth that happens within that retirement product is not taxed. You're only taxed at withdrawal. So retirement annuities are great for building generational wealth. Why I say that? Because it's not limited to employed people. Any South African with a South African ID number can have a South African retirement annuity. Even your child, your great-grandchild, niece, nephew. So if you have a child, you can easily make a once-off deposit into that child's retirement annuity in that child's name, linked to the ID number. And that retirement annuity will continuously grow. If you're in the right kind of funds, it will continuously grow, and you can never access retirement funds prior to retirement. There are some circumstances in terms of divorce and immigration or permanent disability, but you can't withdraw from that. Okay, the rules are set to change, but nothing's official yet. But see it as you can't touch it, and let your child enjoy all of that tax-free growth until he or she is ready to retire. So as Kantha has mentioned, you do reduce your tax liability when you make contributions into retirement funds. Okay, and let me show you how that works. So I want to quickly show you how you can get as much as you can back from the government. So here's a calculator. If you want a copy of this calculator, click on the link where you're watching this video and you can download this calculator for free. So let's say you earn 28,000 Rand a month. That is 336,000 Rand a year. So that's your annual taxable income. So you're at work, maybe you are contributing to a pension fund, 2,000 Rand a month equals to around 24,000 Rand a year. So we're going to put in here the annual pension or provident contribution. So if it's 2,000 Rand a month, that equals to an annual pension contribution of 24,000 Rand a year. Okay. Let's say you're a little bit savvy and you've taken out a retirement annuity and you're paying 1,000 Rand a month. You're contributing to your own personal retirement annuity. That would be in 12 months, you would make a contribution of 12,000 Rand. From a taxable income of 336,000 Rand, subtract your pension and retirement contributions, your taxable incomes now become 300,000 Rand. So at this level, at earning 336,000 Rand a year, you are on a 31% tax bracket. If your taxable income is 300,000 Rand a month, you actually drop a tax bracket. You're at a 26% tax bracket at the current 2020-2021 tax period. A tax bracket. Your marginal tax rate now comes down to 26%. All right. So once we put in our marginal tax rate here, we see that our total retirement contributions from work and on our personal side total a sum of 36,000 Rand. And that gives us a tax refund of around 9,360 Rand that you would get when you do your tax submissions. Now, there are other ways to get refunds. Here we are specifically speaking about the retirement portion, mainly because it's time sensitive. All your retirement contributions have to be in by the 28th of February. And if you have a personal retirement annuity, or if your work pension or provident fund allows, you can make ad hoc contributions. So let's say we make an additional lump sum contributions just because we want to maximize this tax benefits. Let's say we make an additional contribution of 50,000 Rand. So that will take our personal retirement annuity contribution up to 62,000 Rand. And you can see the changes that have happened here. Our total retirement contributions for the year go up to 86,000 Rand, and our tax refund is bumped up dramatically to 22,360 Rand. After you've made the various retirement contributions for the year, your annual taxable income drops from 336,000 Rands minus your 86,000 Rand contribution, it drops down to 250,000 Rand. It's a nice tax incentive for you to be investing in retirement annuities. So if you want to get your hands on the calculator, go to www.financiallyfabulousfemales.com/retirement rebate, or you can email me at Yolanda at financiallyfabulousfemales.com, and I will send you the calculator where you can play around and see how best you can utilize that contribution in order to get that rebate. Another reason for getting your own private retirement annuity is that you have control as to what you invest in. Now, if you are in a work, pension, or provident plan, if you are somewhere that's really big and has a lot of pension options, maybe you can select the kind of funds that you're investing in. But typically, in most smaller to middle income businesses, they usually have one set umbrella fund that everybody has to invest in. A 22-year-old and a 60-year-old are in the same fund. That doesn't really make sense in terms from a risk and investment perspective. And when you have your own retirement annuity, you have the ability to select your own funds. You can go super aggressive at 60 if you have that risk appetite, or you can be super aggressive at age 20 if you don't have that risk appetite. The bottom line is you have complete control to switch out and switch in whatever portfolios you like. If you want something like this for yourself, reach out. I'll be happy to help you. So this is the end of part one. There's a lot more to cover. We're going to do it in separate parts because it's quite a huge chunk, and I don't want you to take in a whole bunch of information, get confused, and a lot of things you don't get. So we just covered the retirement portion, and I'll catch you on the next video where we break this down some more.